Hello everyone and welcome back to Sudden Wealth. I hope you're having a good start of the week. Don't forget, if you do enjoy the content, please drop that like and subscribe. We are about 22 subs to reach the magical number of 1,000. So once again, thank you very much for your support. By the way, I'm thinking about making a live stream either Wednesday or Thursday. Let me know if you have any preference, but definitely one this week. Now, if it's going to be Wednesday or Thursday, still a bit, or even tomorrow, it's a bit up for grabs. So it's not going to be Friday. It's not going to be over the weekend. So most likely it's going to be throughout the week. Now, stocks were a bit under pressure from the fact that, Powell was not so nice about March rate cuts. As I mentioned several times during the videos, it's a pure guess. But I do believe the first rate cuts will come sometime in quarter two, probably around May. We see if I'm right or wrong. But that was always my feeling. I think you need economic data to deteriorate a little bit further, and you need inflation data to show further signs of decline. As you may know or not, China is in deflation because, once again, and this is against what the gold bugs like Peter Schiff believe, the most important item for inflation or deflation is actually the weight of the debts in an economy, and is there spending coming from people, yes or no, and are there enough goods and services for the money out there or not. So cutting rates, as I mentioned before, and this is a controversial opinion, I think will actually help inflation numbers coming down. I'm talking about the CPI, because basically that would be a cost that a company has that is going to decrease. So it's one less cost that they need to pass to us, the consumers. Now, and this won't create inflation. Why? Because the majority of the people are already too indebted. So if they go to JP Morgan and the interest rates are 1% instead of 6%, JP Morgan's going to look at them and say, why would I lend you money? You are already with this student loan, this mortgage, this car loan, this personal loan. Yeah, no way, I'm not going to lend you any money. But if Bill Gates goes there and says, hey, can you guys give me $100 million? Sure. Now, Bill Gates will benefit, but the average person won't. So that won't cause inflation. This is where people like Peter Schiff get things wrong, and they don't understand that money printing and cutting interest rates does not automatically lead into high levels of inflation. Now, it keeps businesses alive that shouldn't be alive, because credit is very cheap, so they can just keep refinancing themselves and keeping businesses that shouldn't exist afloat. And this is bad, because that means that people that shouldn't be employed in that company are employed over there, so they are not doing something else which would be more productive. This is the problem of Japan. Japan has had this issue for many years because they had these huge bubbles in real estate and stocks in the late 80s, and they never let them deflate. So people are employed doing God knows what of useless stuff. So they work very hard, but their average growth is 0%, and their average inflation is between 0 and 1%. Problem is that productivity doesn't go anywhere. So the little bit of inflation that creeps in every year after 30 years is a big impact. So what you have in Japan is half the people cannot have kids, otherwise they go bankrupt. That's the end goal of playing this game. Although in the West, we have the advantage of letting in a lot of immigrants, which obviously makes your population younger, even though you're not having kids. But that's too far into the future. There's no point in discussing it right now. I do believe the rate cuts will come probably quarter two. Don't quote me on that. I'm also not going to make big parades. I mean, I'm going to mention it if I'm right, but I'm not going to make here a big parade. It's a bit of a guess. So I like to make the predictions when I'm really certain about something. And I don't like to come here, with a guess, and then if it goes well, it goes well. So let's keep it at that. In any case, once again, look at the bond market. The bond market will tell you where the stock market and other risk assets will move into the future. Now, last week, Ethereum pumped quite a bit, as you may know. Pulse Chain, PulseX, both Ethereum and Pulse Chain. Ethereum, both Ethereum and Pulse Chain. And Icosa, both Ethereum and Pulse Chain. Icosa has gone up from the lows something like 10x, and this actually points me to something about that I believe that is coming. I do think we are approaching a strong altcoin season. Talking about starting probably late Feb, going into March, going into the halving. Now, when I say strong altcoin season, it's not so much what we've been seeing, in which, we go up 100%, but then we stagnate for like 3 weeks or something. No, I'm talking about continued pumps, okay? And the reason why I position myself in the past, during the bear market, when everything was going down, is because people sometimes don't understand the multipliers that well. So let's say you have $1,000 and you do like me, and you buy very close to the bottom. Now let's say that coin goes up 50-fold. So that $1,000 become $50,000. But let's say that another person came in with $1,000 after a 10x pump. So a 50x pump from what I bought means a 5x for that person. So their $1,000 becomes $5,000. So I got 50,000 with the same investment, and they got 5,000 with the same investment. This is very important. This is the problem of why I avoid trying to predict which coin is going to move first, which coin is going to do this. When is this really the bottom? Is this really the bottom? Nobody's going to catch. I mean, somebody will catch, but nobody's going to, ride the absolute bottom to the absolute top. No way. So what I try to do is I create my position very close to the lows, and I create a big position. So if I caught 100x, I'm extremely happy. If I caught a 250x, oh my God, I'm ecstatic. If I caught a 50x, I'm also already very good. So that's my point. So in my opinion, and altcoins seem a little bit quiet, I think we're going to see an altcoin season coming probably in March. And these tend to go quite fast and quite quick. Now, usually what happens is Bitcoin moves higher in price into the halving, and then the halving itself is a sell the news event, just like the ETFs. Remember those people saying that, oh yeah, the price is going up, and then the ETFs come out, and then when the ETFs come out, somehow it's going to propel the price even further. And I said, okay, but you need to understand that what you're predicting has never happened in history. See, buy the rumor, sell the news events happen in every industry, in every asset class, all the time. Buy the rumor, buy the news event would be a first time. So be very careful when people are predicting those kinds of stuff, okay? By the way, I haven't mentioned this for a while now. I just watched it the other day. PSpot. So that's one of my lottery tickets. It's not part of my core coins. It initially launched in the Binance Smart Chain as BNB pot. It is now launched in Pulse Chain as PSpot. I did participate in the sacrifice, where basically you would get at the fixed price of $5, but then the coins get launched in 5 different chains. So BNB was the first one. To be honest, I never liked that method that much. I mean, it's a good marketing tool, but if I do believe that the project's going to succeed on Pulse Chain, why would I buy it in other chains? I would always focus my economic power in the chain that I think is going to succeed, right? In my opinion, but that's my 2 cents. Currently, I think it's around $7. So of course, I'm in the green with that one. Although I do see some potential in it, it's deflationary, fixed supply, burning coins. Every time there's a game, a portion of PSpot is burnt. All of those things are good. I haven't seen anything that suggests me that there's scams involved or that things are not working well. In any case, lottery tickets, this is very important because I talk about them sometimes, is I placed small money in them and I don't have much expectations around it. So if it goes very well, great. If it doesn't go very well, also great. Also fine. I mean, not great, but fine. And usually for security measurements, I don't know if the code is good. I don't know if the parties are reliable. So what I do is I have a separate wallet just for lottery projects. And in fact, I have multiple wallets for multiple lottery projects, because imagine that one project actually does well, but the other one is a scam, and I end up losing all my money despite one of them actually hitting. So this is also an important lesson for everyone, which is, as your portfolio grows, your sense of security should also grow. It makes perfect sense, right? If you have $20, you have it in your pocket. If you have $1,000, okay, maybe you're gonna go out with 200 and leave 800 at home. If you have $10,000, okay, maybe you're gonna deposit it in a bank and keep a little bit at home. If you have $1 million, okay, maybe you're gonna start spreading around banks. If you have $10 million, okay, you're gonna have a bit on banks, then everything else invested, real estate, assets. You see the point? As your portfolio is rising, as your income is rising, your level of security should accompany it. And unfortunately, in the crypto space, I don't see a lot of focus on this matter, and I'm sick and tired of watching people that are worth millions of dollars just losing everything on this basic stuff, right? And sometimes when the market is a bit slow, it's time to rethink about these things. Now, what else? Expect further volatility, that is to continue. That will be the tune of 2024. Whoever's trying to trade this too much in the short term is going to get burned. When you see that the market is very, kind of steadily going up, stably, probably there's an event coming that will throw it into high levels of volatility. Careful with YouTube finance, guys. I'm sick and tired of these guys with World War III and this kind of stuff in their titles. I mean, to be honest, I get it, like, this is YouTube, this is views, etc. But can you please, be a bit at least mindful, I would say, on these kind of topics before trying to just, I get it, you want views, but, do you really need that views that desperately to start, spreading panic into people's minds all the time? And I would like to finalize on how dangerous certain things are. Meet Kevin interviewed Peter Schiff very recently. And as you guys know, I'm a big critic of Peter Schiff. And over the past, in the past 10, 15 years, we've had the biggest bull market in history and the longest. I get it, it's artificial, it's propped up on devaluation of currency. I get all of it. I'm not arguing here if what's happening is good, if it helps people. That's not the point of this argument, okay? The point is, if you invested 1,000 euros in 2009, in the Nasdaq 100, for example, you would have now 8,000 euros or something like that. So what I'm trying to say is that over the last bull market, the S&P went up something like 500 or 600%, and the Nasdaq 100 went up like 750%, something to that nature. Okay, it doesn't really matter. Okay, if I'm off by 100%, sure. But that's not the point. Now, I was looking, there was someone who posted this on his X page. And basically the returns since inception, very important, of his 5 funds, all of them the majority go back to 2012, 2013. Okay, so if you look at it, maybe the Nasdaq is up 400, 450%, maybe the S&P is up 300% or so. The point is, all these funds are red. Many cases deep red, like double-digit red. Now, what it doesn't show is that those are actively managed funds. So that means that he's trading in and out of stocks. So any good year gets slashed by short-term capital gains tax since the majority of his investors come from the US and Canada. So they get smashed on short-term capital gains tax. Furthermore, he charges 2% management fee per year. So you have the benefit to pay him to lose your money while all the other stuff is going up. And he speaks with so much arrogance about things. You see, notice that he always tells you to go buy his funds, but he never talks about the returns of his funds. You see, if I have a fund to sell you, let's say I have something to sell you guys, and I say, hey guys, buy my fund. By the way, I've opened it 10 years ago and it's up 200%. You say, oh my God, this guy is good. Or maybe I would say, look, my fund is up in the last 5 years, has returned 20% per year, or has returned 300% over the last 3 years, whatever the case may be, right? I would tell you a number. Oh my God, this guy is really good. He never does it because all his funds are terrible performers. Now, here's the problem with Meet Kevin. He's not just Meet Kevin, by the way, so I don't want people to think bad of me, but he's a big channel and he's always confronting people, so you should actually just ask basic questions. Nobody of these interviewers on YouTube ask him, oh, by the way, why should we listen to you if all of your funds since inception are losing money while all the other stuff is going up dramatically? So that means that whoever bought in the inception of your funds needs a 20x on their money just to break even, not even inflation adjusted, just to break even from your terrible financial advice over the years. Why should we listen to you now? Nobody asks this question. And this is the problem with the world of YouTube finance. You see, because by bringing him, they get views. So they don't want to piss him because they want him back, so they get views, so they get paid ad revenue. But the audience gets a disservice because nobody asks him the real tough questions. Same thing with Harry Dent. Harry Dent has been advising people to short stocks since May 2009. Short stocks almost on a yearly basis in a market that did nothing but go up. Never is he questioned about it. He says, I predicted the financial crisis. Did you? Then why did you write a book in 2004 to 2006 predicting Dow Jones 40,000 and the Nasdaq 20,000 by 2010? How can you predict this and have the biggest financial crisis since the Great Depression at the same time? You didn't. He's taking credit for predicting something you never did in order to convince you to buy his books, buy his newsletters, speaking fees, sponsorships, getting him to events, getting him on television. That's it. Who's the victims in all of this? You guys. The audience becomes the victim. You see, because Meet Kevin gets paid on views, so he doesn't care. Peter Schiff gets paid on views, sponsorships, people buy funds, so he gets his management fee, so he doesn't care. People who actually believe all this stuff because there's no proper exposition of the situation get annihilated. That would be you. So there's a reason why I never charge for anything, why I don't create private groups, why I don't sell you courses. See, I could just take my 2023 predictions, which were basically all against Peter Schiff's prediction. I was right in all of them, he was wrong in all of them, right? I could just take that and use it to create a private member group where I would give you the latest tips or the latest top 10 cryptos that are going to go to 1,000-fold. And I would probably make, maybe $4,000 per month, which is quite decent. I mean, it would pay most of my expenses per month. I don't spend that much money, so it would probably cover me. I don't do it because it puts me in a difficult position, and it puts me actually in a position either that I can lead you to lose money somehow, or that I have the incentive to tell you stories to keep you interested in order to keep getting your money. And also opens the door, by the way, for me to be called a scammer. So if I don't ask you for money, if I don't put a PayPal account here, if I don't say send money to my wallet or send money to my this or whatever, if I don't do if I don't sell you any trading special courses or anything like that, then I cannot be a scammer. That's my goal. But in any case, guys, this is just a perfect example. Just go to his website, Euro Pacific Asset Management or whatever. Just Google it. He has 5 funds. Put them on Google, the tickers, check the performance, because you see, talking is very easy. Returns in the market, well, not so great now, is it? And with that, guys, thank you very much. I'll keep you posted on the live stream. Don't forget, like and subscribe. Really appreciate your support. And I'll catch you in the next one.